What's going on, everyone? My name is D. Anthony with EvolutionTraders.com. In this video, we're going to be looking at the NASDAQ 100. We're going to be going over the daily chart specifically. And the reason why is today we had quite the flush. There was one point in time today where we were actually trading over yesterday's price action with a lot of room to run. Now, again, here's one thing that is a little troublesome. Okay, it's a little worrisome. It's not to say that the market's going to hell in a handbasket and we're going all the way down to zero, but it's just definitely something over the next coming days to weeks that we need to be mindful of in the price action. So we had a nasty reversal, call it news, call it headlines, whatever you want to call it. About 11 o'clock in the morning Pacific Standard Time, we started to sell off a little bit. And we continue to sell off, and we continue to sell off, and we continue to sell off. Now, we came down today to the 50-day moving average. Now, if you know anything about technical analysis and moving averages, you know that the 50-day moving average is very, very important. It's significant because normally, typically, whoever is controlling the 50-day moving average, generally speaking, is controlling the overall price action and movement and direction of the stock, whatever chart you're looking at. So if you notice on my screen here, we're looking at the daily chart and we're going all the way back to January of 2024. Okay. And you can notice here, we've gotten close to, but have never tested the 50-day moving average. Okay. Today is the first test of the 50-day moving average in almost 3 months. Okay. A little over 3 months now. And that's very significant. And the reason why it's significant is because, is it needed? Yes, entirely 100,000%. It is definitely needed to be tested. Why it's needed to be tested is because you want to make sure that the 50-day moving average is strong. You want to make sure that the bulls and the buyers are still there at these levels and there's not any more technical damage done below the 50-day moving average. Because if you take this, for example, if we've been trading over, and I'm going to kind of actually zoom out just a little bit more. If we've been trading over our 50-day moving average, and I'm scrolling back in time here, okay? Let me move this 1 second. If we kind of look to the last time we were trading below the 50-day moving average, it was in November, okay? November of 2023. And this is significant, again, for the third time saying it, is because look at what happened here in the time frame of around November the 2nd to November the 3rd, when we reclaimed that 50-day moving average. Once we reclaimed it, we really never looked back, and we were trading from a price of around 15,000. Now, we've gotten all the way up to prices closer to 19,000 in the past 4 months, 5 months almost. And when you really look at it, if we were to start to lose the 50-day moving average, I'm not saying that we're going on a 4-month sell cycle, but you get the point. So being that this is the first attempt of testing the 50-day moving average, I would say that there's going to be some type of bounce. There's going to be some type of relief bounce short term. Now, whether this bounce holds or not, you should see some type of bounce. And here's what I want to look for. We're closing out the week here. I don't want to get overzealous and start putting on a bunch of positions, long, short, this, that, and the other. I want you guys to be a little bit more cautious. I want you guys to size down a little bit. We're going to play this as follows. If we gap down tomorrow, okay, if we gap down where in the overnight, in the pre-market session, we're trading below today's lows, today being the 4th of April. If we open up below the 50-day moving average and the price is pushing down, I want to ignore the short, okay? Ignore the short. Now, you may be thinking, why would we be ignoring the short if you just said if we get below the 50-day moving average that there could be, potential damage? Wouldn't I want to be a part of that short position below the 50-day moving average? The answer is yes, but not off the first initial move. So if we do gap down and we do start to wash in pre-market off the open and we start to lose this 50-day moving average, go ahead and let that go, because you don't want to be trapped on some type of bear trap. Okay, now if we gap up tomorrow, I want you to avoid going long into that first movement, because going long into that first movement could be the bull trap to then flush below today's lows, and that's the short position you're going to want to be in. So it's almost counter opposite, right? Now, if we open up flat, we're going to need to let the market digest, at least let the first opening range kind of pan out, the first 30 minutes, and then we're going to see if which side wants to confirm, whether it's the short or the long. So again, tomorrow's game plan going into the 5th, if we gap down, let the short position go because we don't want to get trapped. Look for some type of bounce, look for some type of reversal off of an hourly chart, rising support. Once we get that bounce, you want to be a part of that long position. Now, if you take part in the bounce position underneath the 50-day moving average, understand we're below the 50-day moving average. We do not expect it just to come back up to the highs. We're just looking for a scalp on a long bounce, get in, get green, get out. The level you're going to be looking for tomorrow is at 17,953. If we get below that before the market opens, let that go, see where we catch support, see if we can catch a little bit of a bounce going up. Just treat it as a scalp. We're just taking cash flow. Again, all long positions underneath the 50-day moving average are treated as scalps. They are not all-day continuations. They are not, moves where we're just going to have 100% confidence that this is going to hold, because the sellers could step in at any time. Now, if we gap up, if we gap up higher, we're going to let the long position go. We're going to wait for that to get rejected into upper supply. Some of those upper supply zones that we would be looking for is 18,170, and then we would be looking for 18,240. Once we get rejected on those areas, then and only then, once we lose today's lows and get below this 50-day moving average, again, today's lows are going to be sitting at a price of 18,055, and then we're looking at that 50-day moving average down here closer to 17,900s, right? As soon as we start to lose that, that's your short opportunity. So that's how you're going to play for tomorrow. You're going to allow these things to happen before you start taking trades. You're not just going to wake up in the morning and see the mark shooting higher and think, okay, great, it's time to go long. That was the back test, and we're just going long. Because odds are you're probably going to get in way too late, and you're going to be chasing price action that's going to be running right into supply, and then you're going to get trapped, and the price is going to go below you. The same thing if we open up super down tomorrow and the market it gaps down 100 points or 150 points, and you think, great, now the market's finally starting to roll over. Guys, the market's been rolling over since a price of 18,700. We're currently trading today at around 18,070. So we're down 700 points this week, okay? So the market has already started that move. You are already late to that party. So again, stay away from the short on the gap down, okay? We're playing counter opposite here. I hope this video helps you guys. I hope that you can get something from it. Hope it kind of makes you understand price action a little bit better. Again, my name is D'Anthony with Evolution Traders. Make sure to like, comment, subscribe if you want to trade with me. That link is down in the description box below. Also, if you guys would like to join Top Step or Apex, two prop firms, reputable prop firms that pay out, that provide their own individual benefits. Apex a little bit more for scalpers, Top Step a little bit more for day traders who like to let their positions move and swing and ride with the waves. But again, if you'd like to sign up with those guys are down there in the description box below, and I'll see all of you guys on the next video.